What's up, traders? Anthony Crudele here, and welcome to this week's episode of Develop Your Edge. In today's show, I'm going to talk about trading around a core position. But before we get into that, let me take you to this week's Ninja Trader Charting Edge. All right, got a gold futures weekly chart up. Been using the weekly charts a lot lately, and my reason is because when we start to get really volatile, I like to expand my perspective. Look at the weekly charts. Where are we in the big picture? And gold right now is something that is really starting to show signs of strength, but I don't think we're just a clear path to new all-time highs just yet. And I'm going to explain my reasoning. 20 period, 3 standard deviation Bollinger Bands. You know I love my Bollinger Bands. Red is the 10 period, 10-week moving average. Gold is the 20-week moving average. This is what I use as my go-to for the bigger picture. Now, let's look at gold here. You guys know that I love when a market's going up or down, you've got clean Bollinger Bands. Clean Bollinger Bands just mean Bollinger Bands are smooth, right? You go back and look at every up move that's been established in gold. Market's coming down, comes up, smooth Bollinger Band. Comes back down, gets back above these moving averages. A little bumpy there, but relatively smooth, right? Look at where we are right now. Very bumpy. And when you look at this, it's a downtrend that's just turned into just a big consolidation, a volatile consolidation, but it's not clean. It's not clear. I don't think we're in a clear path to new highs. Every time I look back at gold, what has eventually happened? Bollinger Band has started to come back in, rides that top Bollinger Band on the weekly, and then there it goes. I do not see that here. I see range-bound trade. It is getting more bullish because it's holding above the moving averages, but not that clear, clean look in the Bollinger Bands that I like. If the Bollinger Bands start to come back in and gold starts to hug the weekly, that's when I'll have my clear sign. So that's what I'm looking for on the gold futures weekly chart to get that clear bullish sign. That's this week's Ninja Trader Charting Edge. Now, let me take you to a tweet that I put out this morning, and I got a bunch of messages and comments about this. And I said, I've owned gold through stock market crashes and now through this crypto crash. Don't let anyone tell you gold is a hedge, because having personally owned gold in these situations in the past, it's just not the case. Own gold because you want to. Don't pretend to yourself that it's a hedge. This is me on a personal level. I know some of you may believe that gold is a hedge against stock market crashes for your portfolio. You might think it's a hedge against Bitcoin or Ethereum or crypto. I've been through this, and I just wanted to say on Twitter that, look, my P&L has never gotten better from owning gold. In 2008, I owned gold, and all my stocks went down, gold went down with it. Most of the time, my P&L has gotten worse from owning gold in stock market crashes, and recently in the crypto crash, gold didn't really get hurt that much, but it didn't really help me. That means it's not really a hedge. So I just wanted to clarify that, and I like to trade gold as its own, and Bitcoin as its own, and the stock market as its own. I think there's better ways to hedge. So I just want to make that clear. Now I want to take you to trading around a core position, and I'm going to use the gold daily chart because I've been talking about gold for a while, years on the podcast, but over the last year and a half, been really more active in it. And I talked about how I was really doing well here on that rally. Well, I mean, if you were long, you did well on it. Then I started getting really chopped up and gave a bunch of money back. And I have been continuing to want to own gold for macro reasons. I think it's a good hedge against inflation and actually deflation. My good friend Dale on Futures Radio Show podcast this past week told me that gold is a good hedge against deflation. So I've got some macro reasons to own gold in this environment. So I always go back to the technicals and I say, where are we with gold? I showed you on the weekly that it's just not clear yet. It's not clean. And I don't like that. I like the bigger picture to be clean in order for me to really be in a full position and say, I'm in, I'm going to let this thing go. So I always pull back and I'll then go to the daily and I'll say, okay, do I want to just be fully long in gold right now? The answer is no. I want to trade around a core position. What does that mean? What that means is establish an area that you like, okay? I don't care what tools you use, but establish an area that you like. We're going to talk about being long today with gold. And as it goes up, you sell some, it comes back down, you work the bid, finding support areas that you like, using resistance areas to cover. And I'm talking on a bigger time frame here with gold, but you could do this intraday as well if you think it's going to be a day trade that's going to hold throughout the day. Whatever your time frame is, it doesn't matter. The point of this is that when I don't see a reason on the bigger picture time frame to hold a trade in a full position. There are so few times that you should be in a full position to where you just hold it and let it go. Ethereum, as of late, was one of those markets. Since stopped out on many of those, but I did do some selling up top. And now I'm trading around a core position because the look isn't as clean anymore. When the look gets clean, you could hold. But trading around a core position, it buys you time in the position. And when you look at gold right here, I'm starting to see signs of strength. 50-day moving average is the green. The magenta is the 200-day. I like to use really simple moving averages when it looks to gold because I'm not day trading gold that much. Sometimes I will, but really more trying to hold it for a bigger picture move. And now that I started to see that it was establishing strength above the 50-day and the 20-day, in and out of positions, trying to keep a small long position. And hey, look it, if gold explodes, great. I always have a small position on, but I'm going to tell you this. Every time it dips and I get in more, I'm going to buy gold at my support. When it gets to resistance, I'm going to take some off. I'm going to buy time in the position. I'm going to trade around a core position because the look on the bigger picture isn't that clear. And you, like I said, you could do this on your intraday charts, your daily charts, whatever time frame. I don't think it really matters. When you don't have a clear path, a clear look on your longest time frame that you look at, you got to recognize the environment and say to yourself, I think this is the time to be in and out of this position and always keep a little bit because you never know, all of a sudden gold might spike. And sure, maybe I won't be in a full position, but I think there will be time when the look does get clean, then I know to be aggressive. It's not always about being aggressive. We always talk about managing risk. Managing risk doesn't mean just putting your stop and manage your stop. A lot of managing risk is trading around a core position, getting in and out, and you don't have to be super active. I know some of you aren't, but you've got to have a plan in place to be able to manage the time. If you want to be in something, trading around a core position is psychologically, for me, really helped me just stay in positions longer. I go back to when I got chopped up in gold there. I was trading around a core position. My losses could have been far worse if I just held and just kept getting stopped out. So that's just what I really wanted to dig in today and talk to you about. Hang tight, I'll be right back with my final thoughts.
24/7 access to diverse global markets. Right here.
That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready.
Well played.
Final thoughts for today, traders. I put a tweet out this week that got a lot of activity right when I posted it. In my 22 years as a trader, I've never bought a bottom or sold a top on purpose. If it happened, it was luck. We don't know when tops or bottoms are going to be made. We just have to trade what's in front of us. I don't even waste any energy or time trying to buy a bottom or sell a top. Like I said here, if it's ever happened to me in my career, it's been luck, and I didn't know until way after. The only thing we as traders should be focused on is if we think there's a bottom forming or a top forming, where are we wrong? Second trade first. That's all that matters. If we sell the top, if we buy the bottom, great. But I never waste any time or energy on it. It's a fool's errand, in my opinion. Now, big week for futures traders. We just got off the announcement and the launch of micro Bitcoin futures, and you asked and CME delivered. Micro WTI crude oil futures. Symbol's going to be MCL. They're looking to launch on July 12th. To learn more about micro WTI crude oil futures, go to cmegroup.com. All right, everybody, if you're enjoying this show, click that subscribe button. If you have any questions or comments, please put them down below. You could also DM me on Twitter. My DMs are open. Anthony Crudele. Don't forget to check out Instagram at Anthony C. Crudele. That's a wrap for today. See you next week.